Good morning everyone. Today we'll explore IKEA's financial performance for the year ending 2023. IKEA Group operates as the worldwide franchisor and supplier for IKEA, collaborating with franchises globally. IKEA sells home furnishing products at affordable prices, operating in over 62 markets with more than 470 stores.
Let's take a closer look at IKEA's 2023 balance sheet. First, let's talk about non-current assets. This amount to an impressive 11.2 billion of euros, with a majority of 9.1 billion of euros attributed to intangible assets such as trademark rights and intellectual property. These were acquired in 2012 and are being amortized over 45 years. This is a strategic move. Next, we have current assets, which total 11.8 billion of euros. Within these, 4.8 billion of euros is in inventory, reflecting IKEA's enhanced supply chain efficiency, which has reduced lead times. Additionally, 6.9 billion of euros is held in receivables. Now let's look at liabilities. These have significantly decreased to 5.2 billion of euros, a major improvement compared to the previous year. Non-current liabilities are now just 86 million of euros, thanks to a capital restructuring where the entire IKEA Foundation took over ownership, converting debt into equity. Meanwhile, current liabilities amount to 5 billion of euros, covering operational payables. Finally, let's discuss equity. IKEA's equity has surged to 17.8 billion of euros, pushing the equity ratio up to 77% compared to 40% last year. This indicates a strong financial position.
An important change this year was the capital contribution of $8.3 billion received from its current shareholder, the IKEA Foundation. This investment improved IKEA's equity position and reduced non-core liabilities, increasing the company's financial stability as well. This aligns well with the company's objectives, which include business growth, operational efficiency, and sustainability.
Let us now take a look into IKEA's income statement for 2023. Starting off by the total revenues. IKEA recorded revenues of 29.1 billion, up from 27.6 billion in 2022. This increase was driven by a wholesale sales to franchises and franchise fees, which grew as global sales recovered. Talking about cost of goods sold, the cost of goods sold amounted to 23.8 billion. Although still high, this represents a stabilization compared to previous years when the company absorbed steep cost increases. As a result, gross profit rose to 5.2 billion. Next, looking into operational costs, despite inflation, operational costs were reduced to 3 billion, helped by international restructuring and a reduction in the workforce. IKEA's decision to divest its Russian operation also played a role in this reduction. And lastly, the net profit. After accounting for taxes and financial expenses, IKEA achieved a net profit of 1.6 billion, more than doubling from 2022, where they showed a net profit of 710 million. This recovery reflects a strategic cost management and a return to more stable supply chain conditions.
At the beginning of fiscal year 23, IKEA had to deal with a cost challenge and a negative impact of margins. A key element here is the cost control from supply chain improvements, especially the lowering the cost of goods sold to stabilize logistic and material costs. This positively impacted IKEA's margins, which along with the higher revenues allowed the company to even pass some savings into customers.
In conclusion, IKEA's 2023 financials reflect a solid recovery, with a substantial increase in equity and a return to higher profitability. The balance sheet shows increased stability from restructuring, while the income statement highlights strong revenue management and successful cost containment. IKEA's focus on affordability, efficiency and sustainability is evident throughout its financial performance, positioning it for future growth. Thank you for your attention.